Hey, what's going on, guys? Sprinks Trades coming to you live with another week of chart breakdowns. Uh, Apologies in the intro. I thought we had an intro playing, man, and it didn't play. So, um, if you guys don't know me by now, again, I've been doing I'm the resident futures indices analyst here on the Trading Up podcast, and I've been doing this for about 10 years now. Coming up on a decade of trading experience and advice. Will be 10 years in March of 2015. So it's kind of like I'm counting down to my 10-year anniversary. Yeah, so again, started out as an FX trader, still really look at, the futures markets and indices really here. So it's going to be NAS100, the S&P, and then obviously the Dow Jones, along with a bunch of currency futures as well. So I made the transition to about futures about a year ago, and it's been, a really cool experience, a lot more regulated, a lot safer. So if anybody's out there and they're trading, unregulated brokers, take, I know a lot of people are not fans of regulated brokers because of the leverage, but definitely look into futures. If you're not trading futures already, just the security that comes with trading on a broker, that you're all getting quoted the same price. There's not any funny business in the price you're being quoted, or your own deposits and things like that. Just it's a a peace of mind. It provides a lot of peace of mind. So and as far as the leverage goes, I know it's less leverage than Forex some of these unregulated Forex brokers, but if you guys follow me in my Telegram chat, I've been able to grow an account from $10,000 to about $40,000 over the past 3 months. And so the leverage is not the issue. The skill set is, right. If you're good at what you do, the leverage doesn't matter. So what I want to do is obviously I hit the comment section, just want to see what everybody's up to. Super says, happy holidays. I appreciate this. I don't know if you're one of my students or if you're just a person in the chat, but happy holidays. Tony, let's see. Tony says, appreciate your time and analysis, Coach Brinks. Oh, Sheila. Hey, Sheila, how's it going? Good afternoon. And Sam came on here and said, did you mean CST instead of EST? You know what? The time is kind of a suggestion. I try to be on here at 10 a.m., but sometimes, life gets a hold of me. So the good thing about this is YouTube. So you don't have to watch it live. You can come on here and watch it, when you get a chance to watch it. So, sorry about that again. I don't know what's going on today with the stream. It's weird. But if you guys can hear me, okay, just drop a comment in the box. There's like a crazy lag. It's a little bit more laggy than usual, which is weird. So if there's a lag at all, if it's coming across as a lag, it's coming across as a lag on my end. So let me know if you guys are experiencing some lag. But what I want to do now is just kind of go through the indices breakdown. Let's go ahead and do this, knock this out really quickly. I know it's Saturday. This is obviously good, Thanksgiving Saturday. A lot of good football on, so I want to get to that. So okay, so first things first, obviously what I want to do is start dollar index. So if you guys know dollar index, you know that we use this as basically the barometer for the market and to see what the market's going to do. And I like to start on the weekly time frame just to get a better understanding of what's going on. So there's a few things here. So coming into this target, I made the call out last week that I wanted to see, since we inverted this gap, that um, and if we look back, this inverted fair value gap, again, it's a civvy, right? So normally how I draw these on my chart is I have them red, just to kind of mark sell side, right? So we understand kind of what a civvy represents. If not, go to my YouTube channel, watch the free content. There's a lot of free videos there. Um, Basically a mentorship for that I'm doing. It's free to the public. So, but again, we saw this inverted, this fair value gap of the civvy be inverted. And so we wanted to see this thing continue to run higher, right? And so I said that ideally I wanted to go long somewhere around the high of this fair value gap, or somewhere as low as the midpoint. But ideally, I want to see if we're going to continue to be bullish. I wanted to see the market really stay above the middle point of this fair value gap, which is about at 105.65. So again, we disrespected this civvy. We came out, no longer respected it. We expected to kind of retest this zone. Ideally, again, I wanted it to kind of touch the top end of this and continue to go up. But what we're seeing here is permissible too. If we look at the middle of this, we also can see that the market has traded back into an old imbalance here, right? It's a weekly fair value gap. So there's a lot of stuff here that kind of lets us know that this potentially could be the area where we want to see the market turn around at. So ideally, I'm still very much bullish on this, right? Even though we had a week of bearishness. From a weekly time frame perspective, there's really nothing here that says we should. Now, if we close next week under consequent encroachment and really outside of this fair value gap, then we could probably start to make the idea here that we could go bearish. So, but as of right now, that's kind of where we're sitting at. Going out of the daily time frame on dollar, right? We've broken structure here, but we traded back into this volume imbalance that we haven't respected at all either. So we could see this kind of play out a little deeper. I'm looking at this order block here at the 105.10 level. So we could see this run a little bit lower before we turn around. But I'm really eyeing this zone here. Why? Because there's an order block here. There's a fair value gap here. We know that this zone already is going to be consequent encroachment on the higher time frame, right? So this red line is going to represent that consequent encroachment. So there's a lot of stuff here that could cause this to turn around and go up. If we fail to respect this down here, then I'm probably transitioning more back into a downtrend. But ideally, somewhere in this range here, if I'm just drawing the zone out, like somewhere in this range, I want to see the market start to turn around. Again, it's at 105.13 level at the low end, but there's also this volume imbalance there too. So I would say as low as 104.79 before I really start to commit to the idea of bearishness, just based on that weekly time frame. But as far as the daily structure goes, we do have a break of structure. We closed through it. We failed to respect this volume imbalance here. We also, if I zoom in, we failed to we actually created a new volume imbalance from this low to that high, right? So there's a lot of stuff in here. There's a lot of chop here, but ideally, long-term picture, I'm still bullish. But ideally, I really want to see how the market responds to a lot of these levels in the zone. So this is going to be a very interesting week. And if you guys are not, if you've only been a trader for a limited amount of time, you don't have a lot of experience trading, then you might kind of get used to you have to get used to trading in December. Usually towards the end of the year, we start to wrap up for the year. There's not a lot of volatility left in the markets, or there's a lot of people on vacation, a lot of traders, professional and smaller hedge funds, a lot of businesses that move a lot of these markets in terms of like investments, right? They start to slow down for the year. So there's still going to be a lot of ample setups here, but it's going to be a little bit probably slower going into the month of December. Doesn't mean you still can't trade. Doesn't mean that there's still not going to be opportunities, but it's going to be a little slower, a little fewer than what we would typically see. So let's go ahead and go to Euro futures. Again, this is the one that I've been watching the most, and I was actually detailing a lot of stuff to my students. So this week I ended up taking a couple of trades. So the first one passed a top step challenge that I've been working on since last week. It's a 50K account. I'll probably drop the link in here so you guys can see it. But again, if you guys are in my Telegram, I posted that last week, just basically saying like, hey, I passed it. But I want to be more transparent as a trader. In this industry, there's not a lot of transparency. You see a lot of people flashing profit shots, but you don't see a lot of the back end work that goes behind it unless you sign up for somebody's course or pay for something, right? And so again, I want to change the narrative to this. I think we all can eat. I think there's a lot of opportunity in the markets for a bunch of people to make 100 or $200,000 a year as traders, and still there be billions in the market, right? So, um, so transparency is kind of my thing. So, anyway, going back to Euro futures, there was a couple things that we wanted to see happen here. Um, oops, that was there. So yeah, so coming into last week, if we look bigger picture on Euro futures, again, Euro futures is going to be Euro USD, the futures version of it. So if you're looking at Euro USD, it's going to be the same thing. So what do we see on Euro USD? Well, we traded last week into this from a weekly time frame perspective. We traded back into this overall BISI here, right? I just kind of deleted it off my charts because I didn't want to keep seeing it. Um, one second. Sorry about that. I had to plug my charger in. So yeah, so ideally, again, we traded back into this overall BIST again. If we're drawing BISTs out, usually they're green, something like that, right? So ideally, we saw the market really tank into this. So I basically made the comment that I think the market long term is going to be bearish. And so if we look at this from a weekly perspective, we see that there's been this pretty much a lot of what 1, 2, 3, 5, 6, 7, 8, 9, 10, pretty much 10 weeks or 2 months of bearishness at this point. So, um, without a lot of counter trend weeks. So I said that, this was our long-term goal trading to this fair value gap, just because we wanted to see how this was going to react. And if we're going to go bearish, we either wanted to buy at more of a premium level or wait till the market kind of broke down here and retested and kind of inverted this gap. And right now it's respecting this gap, but so coming into last week, what we wanted to see, if we kind of zoom in on current price action, was I wanted to see the market respect this overall fair value gap here and then look for opportunities to sell. The market gapped up very high to start the week off. And so it wasn't a huge opportunity to sell off. And it really kind of danced around here. And it was here that I ended up taking a couple of those challenges. So again, I think it was $1,500 in the challenge top step account and then another $1,200 or $1,300 in the personal account last week. So it's about $3,000 if you count everything all together. Um, and so obviously we didn't respect this, but my thesis coming in here, like my idea coming in here was like, if we could respect this fair value gap, then we could take things a little bit lower, right? We could take things a little bit lower. So ideally, that's kind of what I wanted to see coming in. We ultimately danced around this for a couple of days. I thought we were gonna, after we took out buy side liquidity here, we ended up trading back into the range. But then we kept going up higher, right? And so if we go to the 4-hour time frame, we're kind of in this zone right here where we traded up to this 4-hour fair value gap. And ideally, we want this to continue to go down. I think this is a counter trend move. I don't think we've fully shifted, and really we won't fully break until we take out that high. So what I'll be looking from a weekly time frame perspective is I want to see the market trade back up into this range. And this is really going to be the range that kind of like defines what I think this run is going to be. If we invert this, then most likely we're going to keep going up. But from a weekly time frame perspective, I would like to see this play out. I'd like to see us just trade up into here, potentially peek into here. Best case scenario is we peek into this and we close back below that high right there, which is the low end of the fair value gap, and we take things lower. So that low end is going to be 1.0621. And so ideally, I want to see the market see this trade into there. I actually make this a little bigger because of that volume imbalance. Anytime you have 3 candles that form a fair value gap and there's a volume imbalance at the top or bottom end, just go ahead and extend that fair value gap up a little bit. So it kind of gives you a bigger zone to kind of represent fully everything. So ideally, I want to see the market really trade into this range here and then continue to take things lower. So that's the weekly time frame. The daily time frame again kind of lines up. I could see a world where we just run liquidity off of this high and then fall over, right? I'm constantly asking myself as a trader, where's the money at? Where's the money at? And so since this is a daily swing high or swing level right here, I know there's probably going to be a lot of money sitting up here. So if we keep running past our initial area where I thought we're going to continue to target, the next, you have to kind of put it in your head, like, where's the next area of liquidity that the market could potentially run up? And it would be this fair value gap or this high right here. So market really running into that would be ideal. So like kind of like call it like a turtle soup, but basically trade up into here and then keep going lower. So running this high, it looks like it's about to break structure on that higher time frame, that daily, and maybe it does, maybe just trades over it really quickly and then the next candle closes below it, right? But or it wicks right above it and then goes lower. But I'll be looking for opportunities to sell in this next week. So that's Euro futures. Let's go to pound futures. So same thing here, right? We pretty much got everything we wanted to see on pounds so far. Pound futures, again, that's pound futures is going to be 6B1. Same thing as GBP USD, Great British Pound US dollar. So ideally what we wanted to see is this trade into here and then look for opportunities to sell. Why am I bearish on this? Well, there's a couple of things that happened, right? We ran up past an old high and then broke down, right? So we grabbed that money, that liquidity that was sitting above these highs. Right, there was money sitting here, and then it ran it up again one more time and then dropped. So what am I looking at now? So again, when we look at this idea of trend line liquidity, which is here, the market does not care about your trend line. Like, there's so many different ways to draw a trend line. Should I draw it like this? Should I draw it like this? Should it capture all those levels like that? Like, there's so many different ways to draw a trend line, but the market doesn't care about your trend line. What it cares about is the liquidity that's sitting underneath your trend line. And anytime you can build something like this, or you can kind of take your eye and clearly see a trend line, what it is the market and the algorithm are doing is kind of keep baiting traders into using that as an opportunity to get into the market and jam their stops underneath it. So the market does a couple things. It creates liquidity and it engineers liquidity, and then it matches that liquidity, right? And so using this idea, there's going to be a lot of money sitting underneath these lows. So ideally, I want to see the market really start to attack these levels on the way to this fair value gap here. So I think this is going to be our kind of like final target on the run, on this bearish run that we're having. We could run lower, like there's room to run lower, but I'm being very conservative. And once we invert this, then it will give me a better idea if we get that far. So ideally, everything last week is playing out. So we want to see the market run back into the zone here. It did. So I would not be surprised if we maybe start the week off going a little higher in the gap and then kind of follow the main projection here where we go bearish. Again, same thing as Euro. If we invert this this gap, then we could probably see ourselves running a little bit higher. So that's kind of what I'm seeing. Let me hop over to the comment section really quickly, see if there's anything. There's nothing going on. So cool. If you guys have questions, feel free to drop them in the comment section while I'm doing this. Let's look at, I'm going to add one pair to this week. I think it's going to be New Zealand. So New Zealand futures or kiwi futures, I think it's New Zealand dollar. Same thing here. Again, daily time frame. we could see a world where we already took out this high. Maybe that's the high that we're looking for, where we know there's going to be liquidity at, or it could be something like this. So we could retest this and then go lower. But I do think eventually we'll probably make our way down here. So I think that'll be the target. Let's go ahead and go over to NASDAQ. I think every week I'm going to start adding an additional currency future, just because I want people to get exposed to that. And honestly, like I said before, I've said this a million times, actually, I think currency futures are the easier one to trade, rather than, currency futures or Forex, whatever. I think those are easier markets to trade. And sometimes it's not about how many contracts you're stacking on top or how much money you're making. It's about what's the easiest read for you and how can you kind of be comfortable in that. Because if you're very comfortable trading euro, but you freeze up when you hop on NASDAQ, then that means you probably don't need to trade NASDAQ. Just stick to the, the rivers and lakes you used to, right? So let's go ahead and look at let's go ahead and look at NQ. I thought I had NQ sitting on there. Okay, whatever. This is MNQ, but ideally same thing, right? So ideally, how we close this week out is, I thought that we were probably going to invert this gap, and I wanted to see price run higher potentially. And so if we go down to the 4-hour time frame on NASDAQ, this is pretty clear. I mean, like, we've pretty much inverted every SIBI in this range. We're making higher highs. Ideally, I want to see the market continue to run up to this high right here. 21,340. So I want to see the market really run higher into that. It's going to kind of be my target for this week. If we look at the daily time frame again, we inverted this first initial gap, which when we pull up S&P, it'll be a lot more clear there. But ideally, I'm looking at the same thing. I want to see the market really attack this high and go from there. So 6E, let's go to S&P. Yes. So again, this is the micro MES chart here, but yeah, I mean, we're pretty much trading at all-time highs. Let me pull up the actual ES contract. ESZ 2024. It's weird. Let me pull up the micro one again then. So from here, we're pretty much trading at the all-time high again on ES. Again, S&P is ES. The only thing I can see here is we would come back up to the high and do that. I also could see a world where we trade back down into this volume imbalance here on the low end. So ideally, I want to see something like this happen. In best case scenario is I'd love to see ES really retrace back down into this volume imbalance here, which starts at 6,006, and then take things back to that high. That would be the best case scenario. A lot of times we end up running the high if the candle closes like this. But if it doesn't, that's what I'll be looking for in ES. Let's look at Dow Jones to see what they're talking about. It's not Dow Jones, it's dollar. YMCMB. Okay, so ideally we took out last week's high, or the previous week's high, our target. So ideally what I want to see here is the market continue to run higher and really take out this high here. So that's what I'll be looking for. If we jump down to the daily time frame, So ideally, that's what I want to see as us continue to run higher, taking on old highs. If I had to kind of contain a range for this, I think the best range would be somewhere. Let's see right there. Let's see. So ideally, I would love to see the market to stay above consequent encroachment and not even trade really back down to that high. But a close above this would kind of maintain my confidence that we're going to continue to go higher. So I'll put daily CE level. So that's all actually I have for you guys this week. Again, I'm bullish on indices. It looks like a world we could be bullish on dollar as well, and I'm still bearish on most currency futures. I'd like to see prices continue to go down. They could run up a little bit, but at this point, for the first couple days this week, I'm pretty much in a chill mode where I'm not really trying to trade as quickly. I'm pretty sure NFP is on Friday, but if I don't see a setup I like, I'm just not going to try and take it to this point. So that's what I'm looking for. If you guys have any questions at all, feel free to let me know. I will hop over really quickly to Forex Factory as well, because I want to start incorporating more and more of this stuff into the content. And so ideally what's the news looks like for next week is there's yellow folders on Australian dollar, a lot of Asian session news. There is a PMI 10 o'clock red folder, so maybe that'll be a good opportunity to kind of watch that. Jolts is happening, as well as CPI 230 for CHF. That's not us. So Jolts is going to be the real big news on Tuesday. Wednesday is going to be a lot of red folder news. Obviously, non-farm stuff will be happening on Friday, but this is kind of the precursor to that. 1:45 is when Jerome Powell will speak. Thursday, unemployment claims as well. And then Friday, I believe we have non-farm, so NFP on Friday. So this will be a standard NFP, our standard week where I'm only really looking to trade the first through 2 or 3 days a week until I get a good setup, and then I'm calling it a week. Ideally, it's looking like that probably is going to be Tuesday, Wednesday, and that's it. Oh, there's an 8:30 on Thursday, but usually I try to cut off all my trading by noon or on Wednesday because the markets tend to get choppy. They tend to consolidate ahead of non-farm payroll, and so I don't want to get caught up in that. I'd rather just sit that out and then just wait for an opportunity, maybe 10 or 15 minutes later, right? If there is anything, but ideally I'm staying out for the week, so I'm not trying to rush anything. I'm starting to be a lot more selective. So if I'm looking at days I'm probably going to actually trade next week, again, I want to trade around somewhat of the safer red folder news, like the CPI, PPI. But yeah, Wednesday I probably will be done after noon, especially since especially since Fed Chair Powell speaks on Wednesday, and I don't really want to be anywhere near the market on that. So that's all I got for you guys. I'll stay on for any questions that you have. If you have any questions at all, feel free to let me know. Again, if you're following the social media, you can find me on all social media at Brinks Trades, BRINX Trades. And so that is really just my platform for really following up with this analysis throughout the week. If it's on Telegram, or just staying locked in with me for trading content on Instagram. And YouTube obviously is the free channel where I give away, I'm doing a free mentorship pretty much for anybody that wants to watch those videos that live online, at least, until we wrap up. I don't know if I'll keep them up there forever, but it should be pretty cool. So again, if you guys have any questions at all, feel free to hit me in the chat. And as we get closer to the end of the next week, I'll start following up in here in that chat and seeing if there's any activity or any new developments that I need to kind of make you guys aware of. So that's all I'm doing this week. So hopefully you guys enjoy Thanksgiving. Hopefully you enjoy your time with your families and a lot of the football that's coming on this week. So Yeah, so hopefully everybody enjoys that. Go watch some football, go green. Peace.